we are seeing a lot of policymakers in Asia basically saying we don't really need to hike rates yet. Despite all of that, we are starting to see one big market, China, which has already started normalizing the monetary conditions. At some point in time, we do expect that inflation concerns will lead to policymakers across the region starting to normalize the monetary policy. And hence, at some point in time in next 6 to 12 months, we should see a degree of pickup in interest rates and hence better NIMs for banks in Asia. Now, within that context, I think ASEAN banks are very well positioned right now. Singapore banks, Thailand banks are top of the pecking order, I would say. And
Okay.
simply because, and you've already seen, as you shown right now, Korea and Taiwan have worked quite well. And I think now it's time for some of the ASEAN banks to perform meaningfully.
Do you have a favored pick in Singapore banks?
Singapore banks, we hold overweight on all the three banks. And the broader logic here, and for Thailand also, we like all the large banks there. The logic here is pretty simple, that as goods trade improves, as interest rate becomes a bit more positive and the yield curve starts steepening, because deposit franchises for Singaporean banks and for some of the large Thai banks is so good, their cost of funds will lag quite meaningfully. Plus, if you look at the vaccine uh, progression over the next 3 to 6 months, it is improving at a pace which should give a significant uplift to travel, which is again quite important for both Singapore and Thailand.
Harsh Moinktavi joining in this conversation. In which region across ASEAN do you think the inflation risk is the highest? And so a liftoff in the US, I mean, which region would that impact the most within ASEAN, you think?
Yeah, if Tanvi, thanks for that. If you kind of go back to what is the genesis of inflation, why inflation has been low, we have seen that there's been massive amount of money, 53 odd trillion dollars of money pumped in by various central banks between 2008 and 2021. It has led to very minimal 25 odd trillion delta in global GDP, but almost 140 and 50 trillion delta in global assets. That's the reason why inflation has been low, because there's been low demand. Now what we are starting to see, led by US, there's significant improvement in demand and capex is going up. So my sense is right now it's countries which are in the supply chain which will benefit the most. The biggest exporters were Korea and Taiwan. Slowly, we are starting to see that in Thailand, Malaysia, Singapore. These are big exporters into the supply chain. And ultimately, as we move from goods to services, primarily travel and tourism, we get another kicker. So that's the reason why we are quite positive on Singapore and Thailand as two markets for financials.